Okay, so continuation of chapter 6, we'll be discussing philosophy of debt and then other subtopics. Okay, so with regards to debt or incurring a loan or borrowing from people or from an organization or from a financial institution, so when would it be appropriate for a church or a non-profit organization to acquire a debt? Okay, when is it truly necessary for them to borrow money? Okay, for the most part, since non-profit organizations rely on contributions of its members or the congregation to support the different activities and programs of the church, so the source of revenue is quite limited to that. And although there are other revenue sources, the amount of money may not be significant or enough to essentially buy everything that the company, the organization or the church needs. Okay, so sometimes there is really a need to borrow money, but again, when would it be appropriate? Okay, so first thing is that you can't borrow for the purpose of uh what do you call this? Using it in the operations, in the normal or regular operations of the church. Okay? You can't borrow for operations. Okay? The church should be able to uh gather or to collect enough money to support the operations. Okay, the regular operations. Regular operations would include, salaries of workers, buying the supplies that they would need on a regular basis, being able to support the regular activities, like Sunday services, Sunday school, chapel, jeepney ministry if there is, and then what are the other? Essentially those are the regular, operations. Although we do have other activities once in a while, we would consider them, what do you call it? Not really seasonal, but in a way they're not exactly regular. Although if we think of annual activities, then they are kind of regular and they may form part of the regular operations of the church. Okay, but again, regular activities of the church should be supported by the regular contributions, okay, from the congregation. Now, what would be the purpose if the church would decide to borrow money? Okay, normally it would be for facilities, either construction of a building, construction of rooms, or a school or something. Okay, so for the most part, it's for the PPE, property, plant, and equipment. So it could also be to acquire a vehicle, could be to, let's say, buy a computer. Okay, although of course the term of the loan or the debt would depend on the need. It could be short term if it's just for computers or office equipment. Medium term if it's for vehicle, maybe up to 5 years. But for, let's say, building, it could be long term, 5 years to 10 years, or even longer. Okay, depending on several factors as well. Okay, and then okay, so that's the second point. The purpose for which you may only incur debt would be for um, acquisition of PPE. Okay. In a way, the reasoning behind that is that the benefit of time. So let's say if you'd like to build a church or a building, okay, you don't want to save money, let's say for a period of 5 years, and then after 5 years, that's the only time that you will start constructing the building. Okay, so in a way, you already lost the benefit of time, the 5 years that you saved up money for it, right? But if you borrow money on year one, okay, in a way, I think, the church must at least be operating for 1 year or two so that they would have a better grasp of their annual collection, okay? Because it's important for the church to have, again, enough money, enough cash to repay the loan eventually, okay? So they have to consider that. So again, you have your 5 years. You borrow money at the beginning so that you can start constructing the building. And then let's say after 1 year, the building has been erected already. It's already usable by the church. You're able to conduct your activities there. So you're able to benefit from the building already. And then you have the next 5 years or so to pay off the debt. Okay. So it's in a way that's the reasoning why PPE would be a good reason to borrow money instead of just saving up for it and then building it at a later time. Okay, you get to enjoy the usage of the property or the facility while you are paying off the debt. Okay. Third point would be the considerations. Okay, what should you consider or take into account before deciding to borrow money? Okay, there are actually several. First would be, would the church have the capability to pay off the loan on a regular basis? So for example, if it's installment every month, would the church be able to raise a certain amount of money to pay off the debt? Because debt must be paid. So that's the first one, capability to pay. Okay, and then the second one would be, um what's this, I think that not the other factors, not exactly factors to take into consideration, but more on deciding whether to incur the debt. Okay. The second one, sorry. The others is that, okay, is it absolutely necessary? Would the usage be beneficial? Because if it's for PPE, you get to use the facility while you're paying off the debt. And then, would the church be financially capable of paying it off? Okay. In a way, there's a discussion here about, you want to avoid judgment of other people, especially non-believers. You don't want to end up not being able to pay the debt, because then you would, ruin the reputation of, the church leader, the management, and the church itself, because you would have that reputation of not paying your debt if you are not financially capable of doing so. Okay, so you have to make sure that before you borrow money, you'd be able to pay it off. Okay, there are certain churches that have, what do you call this, special cases wherein they are able to find a creditor who would lend them money on very favorable terms. Say for example, the lender of money would not charge interest, they would not impose penalties if you are delayed in payment, or they would let you decide on how much to pay every year. So let's say you pay 500,000 this year, 1 million next year, and then 500,000 on the third year. So there are certain lenders that are like that, but again, those are rare cases. If you borrow from financial institutions, then what you would normally expect is that they would charge processing fees, they would do credit investigation, background investigation, and then they would impose interest. They would impose penalties if you are late in paying the monthly installments or something like that. And then there are certain covenants or term and condition, wherein if you default payment, let's say after 2 months, it's been 2 months, you are still unable to pay off the loan, then the whole amount of the loan would be demandable. So have to make sure that you do have the ability to pay off the debt. Okay, and so there is that. So again, let's what do you call it? Reiterate. Have to consider, is it absolutely necessary? Would it be beneficial, the usage? And then does the church have financial capability to repay the loan? Okay, and then again, only use it for acquisition of PPE. Don't don't use it for operating expenses. Don't use it to pay off another loan. And then as much as possible, pay it off when you can. If you can eliminate it ASAP as soon as possible, then do so. Okay. So those are for what do you call this? For the debt philosophy. Okay. Debt management. Mm-hmm. And then what else? I did follow the the book. With the book, there's a structure of subtopics, but I did a bit of notes on how to present them, so you can still read the book as is. Okay. Okay. So again, earlier we mentioned two philosophies. One would be spending money as you have it, and then the other one is maintaining a reasonable cash reserve. Okay, so how about if you switch from one to another? Okay, or if you are a church which has just started the operation, so you don't have cash reserves yet, so how do you build a cash reserve? So it's quite simple, simple in theory, but difficult in reality. So you have to um, plan it over a period of time. It's very rare that a church is able to do it on the first year, to set aside 25 to 50% of their annual cash collection into their cash reserve. Okay, so if you want, you can schedule it over a period of time, let's say 5 years. So since that's 25 to 50%, so let's say every year you set aside 5 to 10% of the cash annual collection. Okay, so let's say if for 1 year the church collection is 1 million pesos, you set aside 50,000 up to 100,000, and then maintain that as your cash balance in the statement of financial position. Okay, so you only get to spend 900,000 into your various activities. Okay, make sure you set aside up to 100,000. Okay, and then on the second year you do the same. 5 to 10% of your annual collection. So let's say you get to collect 1.1 million. So in that year, since you collected 1.1 million, 10% of that would be 110,000. So for the second year, you set aside 110,000 and then add it to the previous year's reserve of 100,000. So after 2 years, you now have 210,000 as your cash reserve. Okay, and then over the next few years, you do the same. Set aside a portion, 5 to 10% of your cash collection into your cash reserve. And then over time, let's say after 5 years, you would now have 25 to 50% of your annual collection as a cash reserve. Okay, so if something unexpected happens, there are restrictions, so you would have that amount of money that you can use while the restrictions are currently imposed or being imposed. Okay. 6-month reserve. What else? Recommended liquidity and financial position objectives. So this would be, what do you call this? In a way, it's subjective because it would also depend on how well the management is able to budget their money. If they are able to easily cut off certain expenses or cease the conduct of certain activities so that they can save up a certain amount of money, or they can lower the honorarium or salaries of their workers for a given period of time. Again, if, okay, just in case there are unexpected decrease in the contributions being collected by the church. Okay, so I'll stop here, and then in the next video we'll discuss these objectives, liquidity and financial objectives. All right, so that's it for this one. Where's the end?